Token modeling. Marco Pissarello, Muse Fintech. Rick Klink, Malta Digital Exchange. Tatiana Koffman, FullCycle Energy. Moderated by John Matonis, Bitcoin Foundation.
All right, welcome to Token Modeling at Malta Blockchain Summit. Congratulations to the organizers of the event. This is a massive crowd, and it's going really well, and it's only the first annual, so it's a little hard to believe that this is only the first annual with this kind of attendance. My name is John Matonis. I'm one of the founders and director at globitex.com. We've already announced the panel, but we had a late addition with Lisa Aizupete from Fintech, who is going to be joining us on the panel as well. I want to start off with the changes that we've seen in the last only 12 or 15 months, I think, before we get into the panelists. The regulators and the government in 2017 were hit with a massive wake-up call around the world. Previous to the birth of the whole ICO market, there were only two ways that companies had to raise funds. They could either sell equity or they could sell debt. Those were the two traditional ways of raising capital that were available to entrepreneurs. Then we had the birth of the ERC20 token, which is based on Ethereum. We actually had some other tokens prior to that, with Mastercoin being probably the first, even before Ethereum. So those were all, in essence, token issuances. But it really didn't burst out until 2017. And the regulators don't know what to do with this. They know how to handle equity, and they know how to handle debt. But when they see an ICO token, it doesn't fit into any of the existing boxes. So they're a little befuddled by it. My one tip, though, to the banks and the regulators in Malta is if you want to surpass the other jurisdictions like Gibraltar or UK or Luxembourg, Isle of Man, it's really easy. The only thing that you have to do is the banks have to make a market, a two-way market, in digital currency. Don't bank the companies that are providing this service. Just make a market in the foreign exchange market the way you would for euro and yen and pounds and dollar. And you will really be a blockchain island. And no other jurisdiction would be able to compete with that. So I want this panel to be about the token modeling from the utility token side, and also let's talk about, make the case for the security token side, because security tokens now are starting to evolve in late 2018, and I'm going to let Rick make the case for security tokens.
Thank you very much. Yeah, and actually, I also want to say it's amazing how many people are here this time of the day. We expected there to be nobody here, so thank you very much, everyone, for being here. Give yourself a clap, right? Thank you, John. I think. So we're actually setting up on both sides. We're setting up as Malta Digital Exchange. We're setting up a VFA and we're setting up an MTF. So we'll be able to handle both security token and the traditional ICOs. So our background is all in the traditional stockbroking world. And so what we see is a big move in terms of into the regulated environment. So as we all know, we had the big run-up into December and the big drop. And I think what everyone's looking for is regulation. And in terms of what we're seeing in our traditional stockbroking firm, we run a firm in Australia that's running about $50 billion a year in traditional equity modelling. There's great new tech that crypto provides where we can introduce with smart contracts and everything else to lower that cost of providing those kind of services. So what we're seeing is we'll provide both. We'll provide them both in a regulated framework. But yeah, we're seeing a big push and lots of interest in starting to move down the security token path, calling it a security token, and leveraging the technology, the innovation that the blockchain provides again, lower the cost of providing those services.
So Rick, I can see why. I can see why investors would like the security tokens because they get a lot of investor rights from that. It's more like a traditional equity. They may receive dividends. They're entitled to a portion of the corporate profits. But what about on the side of the buyer and the investor? How do you envision security tokens having the type of liquidity that we've become used to here?
And it's a very good question. So for example, we signed a new release last week with a company, a gold-backed token in Canada called Tokenomics, which is a company there. What they're doing, they were listing on a traditional exchange in Canada. They're moving, what we've done as an MOU for them to do their new listing over in Malta. And what the advantages we provide is, I totally agree, that currently there's just not enough distribution in the model of security tokens, but our systems plug right into Thomson Reuters or what's now Refinitiv. So they have 250,000 terminals all over the world. We plug straight into Bloomberg with our fixed gateways. So what we can provide from a security tokens point of view with basically industrial level infrastructure is that there's 250,000 ICON users, or Thomson Reuters ICON, that'll see every one of the companies that list. So in this case, Tokenomics, when they come on board, they get that institutional buy-side, sell-side that's not possible in the industry today. So that's how we'll provide that distribution and that wholesale coverage on the institutional part, which is not available today.
Okay, so let me move to Tatiana for a second. And on what advice would you give to companies that are looking at, they're evaluating both models, or where do you come from in terms of the utility token versus security token?
Yeah, so I've worked on both sides, utility and security, and I think in the last couple of months, security token has become almost like a dirty word that's against innovation, which is really a shame because when I started looking at security tokens about a year ago, it was really a way for us to innovate the archaic financial markets, right? It was a way for us to take our trading floors off of MS-DOS and other archaic systems and really create security instruments that were, whether it's equities, bonds, or derivatives that were transparent and weren't prone to fraud and open to a global market and had instant distributions and all kinds of cool tokenomics built into it, right? And then at some point when this wave of regulation hit in the last few months, security token became this blanket term for compliant utility tokens and the asset-backed securities that we looked at. And people feel like regulation is anti-innovation. So I think we're definitely fighting a battle to loosen regulation, particularly in the US, where I do most of my business. But we are heading that way, and I feel like this is a positive movement for the industry.
So can you name some security token issuances, or is it still hypothetical?
It's absolutely not hypothetical. So the first three issuances that have hit the market were Blockchain Capital, Spice VC, and Science. They were all tokenized venture capital funds. VC funds are a really interesting case for tokenization because they're traditionally very illiquid. The capital's stuck in there for 7 to 10 years. So if you had a token that was freely tradable that represented the current NAV of the fund, you could actually cash out at year 3 or 4 whenever you actually needed that capital. So that was the interesting case for that. Then the fourth token that hit the market was Lottery.com, which I had the pleasure of working at when I was previously at DNA. And that was a revenue share token. So it was a play on the royalty payments model. And that model specifically is incredibly interesting because as we're having more and more stable coins in the market, you can actually track the revenues of the company and get those dividends instantaneously or distributions, however it's structured. So through a stable coin, you can get daily distributions rather than a check mailed to you every quarter, right? And then the deal that I'm most excited about now that I'm currently working on is called FullCycle, and we're about to launch a $300 million crypto bond to fund renewable energy plants around the world. And it's an opportunity to have a truly liquid, borderless issuance for people to participate in solving a global problem.
So would those type of tokens, specifically the one with the venture capital, would they have liquidity beyond the jurisdiction of the U.S.? Would they have global liquidity? And would they be able to get down to the retail level?
In theory, yes. So the way the exchanges, the security token exchanges are operating is they go jurisdiction by jurisdiction by jurisdiction. So As long as I'm covering from a regulatory perspective, whether it's US, Singapore, Europe, theoretically my token can move between those jurisdictions. In some places it can be sold to just accrediteds. In some places it can be sold to unaccrediteds. It may have a finite number of holders. So for example, most issuances in the US right now are done under Reg D, which is limited to 2,000 holders. But at some point, these will be the new IPOs. Like this will be the way finance is just done in the next 10 years. It just feels very like slow right now. It feels like we're in cave times and we're literally like with shovels trying to like dig this industry. But in 10 years, like NASDAQ, New York Stock Exchange, every European exchange will have blockchain technology. Goldman Sachs is going to wake up in 2 years, start buying up companies that are in this business. Like this is the future.
No, I agree that it will be acquisition-led. Okay, so I'm the moderator. I have to maintain some neutrality here. I know that both Lisa and Marco are coming at this from the side of the utility token. So what would you advise companies who are looking at an issuance today?
I agree, on the same page. So the most important point now is to bring a blockchain technology to the traditional financial industry. So if we can create a new token, new model that are backed by traditional instrument, we can exploit the good thing of the blockchain. So it will be easy to trade 24/7. It will be easy to transfer and trust property, and everything that in these 10 years was developed for the blockchain increased the decentralization of the finance. So traditional finance must work closer with the blockchain technology. For example, we are working on a new token that is backed by ETFs. So ETFs are traded instrument listed on the stock exchanges, but if you have a token that is a sort of stable coin, but instead of a currency as ETFs, you can use a lot of quantitative analysis to organize portfolio and to do a better management of the asset using a combination of listed traditional instrument and new blockchain-based instrument.
So that sounds like it might be a test case in the courts. So stand by for that one. I know that Lisa has also an opinion on utility tokens. Can you elaborate a little bit on what the benefits would be from the utility token side?
Sure. Thank you, John, for the introduction as well. So I couldn't but agree with Tatiana on her perspective that indeed this tokenization and security tokens as such are really bringing in the innovation to the traditional old and a little, too old perhaps financial industry. But at the same time, I'd like to make a case for actually the other side of the not so traditional investor base, which is usually the non-accredited investor base. So what the ICO phenomenon actually has brought to the industry, something completely unprecedented, is more or less orderly, in a way, standardized process for non-accredited investors to participate in growth of something obviously important like startups. So I would rather say here's a wonderful tool for startups, for companies, even for mature companies, to go to market, to develop their communities, to raise awareness about their projects. And I really, truly believe that the innovation and regulation should definitely not kill this aspect. It's one of the most innovative ways for companies to go to market today and probably for the next, 100 years. Because cryptocurrencies, first of all, is something that we have never seen, ever since we dug up gold. it's a complete equivalent to that sort of asset.
No, I mean, I agree that the innovation is on the utility token side. So that's my personal perspective. But we have 4 minutes left. So since we have the 4 expert panelists, I'd like to use this remaining time for, please take 1 minute each. And if you can answer the question for me, for the entire audience, really, is when will we see a return to the ICO market like we saw it in late 2017, early 2018? And if, please just tell me why you think that and when we might see that return. So let's start with you, Lisa.
Well, I certainly hope so, because I currently help the ICOs to do exactly that. So be it ICOs or STOs, doesn't matter. So I certainly hope it will happen. We have all the tools in place, all the technical aspects in place. There's wonderful jurisdictions open up to various types of token raisers, Malta being one of the biggest ones perhaps today. So definitely, I believe it will happen, because the reason why is simply because the market is mature enough.
So 2019?
And there's
Are you
enough
saying
demand.
2019?
2019, perhaps 2019 second half.
Okay, Rick?
Yeah, I think so as well. I think with the regulation of tokens, I think that's what will help a lot. So again, with what Malta's doing here in regulating the ICO market for the VFA. And I think the second part is when all the custody gets fixed, and there's various solutions coming down the line. Once custody is fixed and the institutions can get confidence again in these kind of tokens, that those two things, I think, will go a long way to lifting the ICO market again.
Okay, so far I'm encouraged.
I'm on the same page, but regulation is one of the most important things. So until the regulation is not set, it's difficult to invest because this process requires an investment. So it's very difficult without a stable regulation. But the regulation will come. And from Asia, from here, from other countries, I think that the first 2 months of next year will have a sort of framework.
So you think we'll see a return
yes.
to the way it used to be?
Coming.
Okay.
Yeah, it's coming
Tatiana?
soon.
I hope we never go back to 2017. I think 2017 was one of the most damaging industry to the blockchain industry as a whole. I think the amount of fraud that was perpetrated was insane. I think so many quote-unquote founders raised money and were never to be heard of from again. There was no tools in place to make sure that there was proper custody, that there was any sort of regulation or any sort of investor protection, accredited or not accredited. And I think it gave blockchain a bad name, and it gives people like me an uphill battle, because now I go to traditional investors and I try to educate them about blockchain and what we can do and what this technology can do, and they say, isn't this thing full of scams? That's what 2017 did to our industry. So I hope we never have to go back there.
Okay.
May I interrupt just one more
Briefly.
thing?
Now it's getting interesting.
So there's also the traditional industry of venture capital and IPOs, and apparently venture capitals also fail, dramatically. So whether it's a scam or outright failure, I think the overall failure rate is about the same. So I wouldn't negate the industry as such just because there are bad players, because in every industry there are bad players.
That's a good point.
And that brings you to actually your own responsibility in taking and doing your due diligence. So I actually see growth in analytics and companies that do the due diligence for the investors instead of segregating the two.
Okay, my opinion is that we will see a return when the current ICOs stop selling their Ether. So join me in thanking the panel. Thanks very much.